Hello and welcome. This is Sean Cornell, president of Cornell Capital Group. And today we are joined by Professor Bradford Cornell, senior advisor to Cornell Capital Group, to discuss big market delusion, electric vehicles. And this is based on a recent paper Professor Cornell co-authored with Rob Arnott and Lillian Wu of Research Affiliates. And Professor Cornell, where did you get this idea for big market delusion?
Well, it actually is derived from research that Professor Aswath Damodaran of NYU and I published in the Financial Analyst Journal, where we looked at big markets, big new markets, and the way that investors responded, and we felt there was a bit of a delusion there. So that was the general outlook. And then as time passed, I thought that electric vehicles were a perfect example. And with Rob and Lillian, we've been able to explore that.
Great. So what do you mean exactly by big market delusion? What's the
there's a couple of parts to it, and we can build it up over time. But it starts with the view that if you want to make a lot of money, you have to be in a big market. Don Valentine, the iconic venture capitalist and the founder of Sequoia, put it this way: our objective is always to build big companies. If you don't attack a big market, you're highly unlikely to build a big company. And that makes it sound like if you can go into a new market, a new potential big market, like online retailing, the way Amazon did, and build this monolith, you're going to make vast amounts of money, as Mr. Bezos did. But you can't take that for granted. And Warren Buffett offers a warning. He talks about the aircraft business. The aircraft was one of the great innovations of the early 1900s. It's totally changed our lives, both in terms of personal transport, business transport, freight, and so forth. It's a massive industry. It's a huge market. But Mr. Buffett notes, if a capitalist had been president at Kitty Hawk back in the early 1900s, he should have shot down Orville Wright. He would have saved his progeny money. And the reason is, yes, it's a huge, big market, but it's highly capital intensive and very competitive, and no individual airline has ever made much money. And the great majority have all gone bankrupt.
And you're seeing some parallels to the electric vehicle industry of today.
Definitely. The situation with electric vehicles today is electric vehicles are probably going to replace internal combustion engine cars in the future. But that doesn't mean that the vehicle market is going to get bigger. It's just going to be the same capital intensive competitive market. But there's so much enthusiasm about electric vehicles, the entire market has suddenly doubled in value. Like, look at the chart that we have on the screen. This shows the market value of the entire light vehicle industry from January of 1918 through of 2018 through January of 2021. And you see the line is basically flat up through March 20th. And then suddenly there's this enthusiasm for electric vehicles. And the electric vehicle value jumps by a factor of more than 5, and the entire industry becomes more valuable, even the traditional manufacturers. So there's this tremendous enthusiasm about EVs leading to great valuations. But Rob, Lillian, and I think it's a good example of big market delusion.
And here's some revenue numbers for the EV specialists versus your traditional car makers.
Yeah, let me explain what those two categories are. The EV specialists are companies that are purely in the EV market. Tesla is, of course, the most famous, but you have companies like NIO, Lucent, XPeng, and many others. But the interesting thing is that in 2018, 19, and 20, there was almost no revenue from these EV specialists. But by the January of 2021, as we saw in the previous graph, they were worth basically the equivalent of the entire traditional car making market. And by the way, the traditional car makers are not sitting still. They've all announced plans to enter the electric vehicle market en masse.
Absolutely. And here's where you can see some of the growth over the last a hypothetical $100 in the last year, and some of these numbers are quite astonishing.
Yeah, there's two astonishing things about these numbers. This is, and let me just make sure we all understand what the chart is. It assumes that you invested $100 in each of the companies listed in January of 2020. What would it be worth now? And you can see that in many cases, it's up by more than a factor of 4. Tesla, NIO, Nikola, Arima, if I can pronounce it right, Eric Moto. All these things are up 5, in some cases, even 10 times. And that's not at the expense of the traditional automakers. Most of them are up as well. And they're up more to the extent that they have claimed they're going to join the electric vehicle market. So you've got the entire industry appreciating. And this is very weird.
It's also interesting if you just go back to the previous slide, is the EV specialists are, they have a small fraction of the revenue. So this is all expectations on what they are going to do. And it's almost like every single one of them is expected to be winners.
Yeah, that's a key part of what Professor DeMotorin and I call the big market delusion. Like Tesla, for example, is now worth about $650 billion in market cap. No automotive company has ever been close to that. Well, Tesla fans might say, well, that's because Tesla is the great innovative company. This is the Amazon. This is the Facebook. This is the Google of the automotive industry. Well, maybe so. But if that's so, it must be at the expense of everybody else. The entire vehicle market isn't going to get bigger. So if Tesla's going to dominate it, everyone else is going to be pushed aside. But that's not the way the market is pricing things. Tesla is dominating, but NIO is growing even faster. And Nikola is growing even faster than that, supposedly. So you have a situation like Lake Woebegone, where everyone's in the top 10%. And that, in our view, is a big market delusion.
And one more final slide here. We have the price to sales ratio for the same companies. You want to walk us through this?
Sure. Let's start with some of the famous traditional makers like Toyota, Volkswagen, and General Motors. And one thing to note before we start talking about the results is I had to use a logarithmic scale. Notice the y-axis, each line goes up by a factor of 10. And that's because some of these price to sales ratios are so humongous, you can't plot them on the same graph without using a logarithmic scale. But let's look at, for example, Toyota, Volkswagen, General Motors, and Mercedes. All very established traditional automakers, been in the business for decades, dedicated to the electric vehicle market. And notice that all of them sell at a ratio of price to sales that's less than 1. If we now turn to the EV specialists, virtually all of them sell at ratios far, far greater, 10 to 1, 100 to 1, and Nikola is actually over 10,000 to 1. And you may say, how could that possibly be? Well, it points again to the big market delusion. It turns out Nikola has never made a penny from actually selling a vehicle. The only sales the company has are $36,000 from the installation of solar panels on the then chairman Trevor Milton's home. So needless to say, that led to a huge price to sales ratio. But putting Nikola aside, again, you have the situation where all the specialists are expected to grow, but not at the expense of the incumbents. That just can't happen. That's a big market delusion.
Yeah, that seems like the main takeaway from about big market delusion. Thank you so much. It's very interesting, and it's going to be even more interesting to see how this plays out.
And I think investors have to be really careful, Sean. You get caught up in these big market delusions because it looks like some technology is going to change things, that any company getting into that space is going to make a lot of money. And we've seen electric vehicles has been a good example. A lot of the new green energy companies, it's the same thing. That's a competitive, capital-intensive business.
See, the cannabis market, it seemed a while ago.
And it looks like that's coming back too.
Yeah.
And the fact of the matter is, a company can have a huge value only to the extent that it can earn rates of return above its cost of capital. And that means keeping competitors out and controlling a big fraction of the market, the way, say, Amazon has done. But that's the exception rather than the rule. In most of these big markets, the early innovators fail, and the competition is intense, and only a few survive. So investors ought to be very careful to tone down their enthusiasm and not be taken advantage of by big market delusion.
Well, thank you so much for your time. And we will have the Big Market Delusion electric vehicles paper available on our website, as well as the original paper with the swath demoter in on our website as well. Thank you so much, Professor Cornell. And for more information, please feel free to email us at info@cornell-capital.com. Thank you so much.